Good evening, everybody. A pleasant summer evening up here in Mars, PA. Had a great weekend doing the private training session with a great bunch of people. Just very enjoyable. Okay. We can see this market is not really changing its colors just yet. Look for a perspective. Wave 1, Wave 2, Wave 3, J-hook type pattern in the Dow, which means we got some more. You are a great bunch of people too. But now I know 6 more faces of the faces that go with the names. So with the Dow still kind of holding on, the S&P 500 still moving up, and the NASDAQ. Whoops, I may have been on the wrong screen. No wonder the S&P looked. There's the S&P. All right. Still in this uptrend, and the uptrend is much more compelling in the fact that not only are we above the T line, but we're still above the 3T line, which means there's good strength in this uptrend. Let's see, gold has come back up. It's trading a little bit lower after hours, but doing a J-hook type pattern. Silver, whoops, there must be another one. A Q. I better find out what the front month is. It is U, all right. SIAU. Yeah, it's starting to set up for J-hook pattern. Shanti, make sure your top tab up there is on screen sharing, not on slides. Jim, I'll have to have you help Shanti. And what else? Oh, real quick, the live cattle backed off a little bit, but so I suspect it's coming back to test the T line, but still staying above the still staying in this uptrend. And we can see lean hogs are starting to come back up. Wheat looks like it's bottomed out, coming back up, and soybeans has been very strong over the last few days. Whoops. You can see how once it did the kind of the doji sandwich, close above the T line, look what it did from here. Went from the 50 right to the 200. A good trading day. Okay, so I'm going to take time tonight to kind of go through and reiterate some of the strong setups. I don't know whether I get copper. I do. Copper, AU, whoops. That's turning around a little bit. not any real strong signals here, but back up above the T-line. Oh, okay. That's right. People in the chat room wanted me to do a commodities thing real quick. Let me see if this one would be a good, viable one. And the reason we don't do a major session on commodities because it's so simple, so quick. So if I can analyze on the daily chart that we're moving in an uptrend, and look at what our breakout was a doji sandwich gap up off the doji, best friend type gap up doji sandwich. Hold on, Bill, let me get through how I trade. So if I can see this is probably moving positive, that's my first analysis, is which way is that entity trading. Then I flip to my 10-minute chart. And the 10-minute chart right in here shows that it's starting to trade positive. Now, for some reason, and I don't know what that reason is, it should be right here. Where there was a gap up. So I don't know why that wasn't the case. But if I see that it's trading positive, confirming the daily chart of what we expect, I use my 10-minute chart as my bellwether. Looks like it's starting to trade positive. If that's the case, just to get further confirmation a little bit quicker, I go to my 5-minute chart. And if the 5-minute chart is also moving in the right direction, which we can see faster, it's making the signals and patterns faster. I don't know whether I can do this. I flip down to the 1-minute chart. And I have no idea where the 1-minute chart. But if I can look at the same time that, and I'm just going to pick this spot right here, that if it's the 1-minute chart is trading positive, which is now confirming the 5-minute chart still trading positive, which means the 10-minute chart is going to continue trading positive. It would be nice to see every day. It would be nice to see what every day, Earl? Then I know I could be trading in positive, and how long would I keep this trade on? Until I started seeing some indecision up here, again on the 10-minute chart, which means if I'm starting to see some selling in the overbought area, is this the selling? Well, I want to see a little bit quicker. So I go to the 5-minute chart. The 5-minute chart didn't even get back below the T-line. It wasn't until over here that there was some selling. It might have taken some profits. And then you can see near the end of the day it was whipsawing. Earl, we do that over in the options room. That's part of the bonus of trading in the options room. So the options room is going to have discussions about options, obviously, and futures. And soon we're going to have the service set up that if you are trading or swing trading and your positions are all moving during the day or just kind of sitting there, we're going to have the binary options being demonstrated by Cam White over in the options room also. So it means during the day, if you decide or you think, for the next 2 hours, it looks like my Dow chart is trading positive, or let's do it easier, something that was trading positive. So we think the NASDAQ's trading positive, and for the next, right here, we think for the next 2 hours it's going to continue to trade positive. Then you might trade a trade on a 2-hour binary option situation. So anyways, it's at least doesn't, if you're sitting there just kind of lollygagging during the day because the market's not moving, at least you could be trading something. DJ, we are going to be doing a session I think on, we're going to be doing next Wednesday, not this coming Wednesday, next Wednesday. Cam and I will be doing a full session at 8 o'clock on binary options. Okay. So anyways, here we go. Is it Jeannie that wanted to? So that's basically how I trade. And let me try wheat. If I saw a day like this and it was confirming, then I go to my 10-minute chart. And so here might be my trade on the 10-minute chart. I guess it would start right about in here. And so I'm trading positive. There's an evening star signal. I'm taking profits, waiting to see what it does at the T-line, a J-hook pattern. I'm trading positive again on the 10-minute chart. I think so. I think Wednesday night it's open for everybody. Oh, nope. No, I think it is. But I don't have anything that says otherwise. Okay. So that's essentially, I can trade off the 10-minute chart. When I trade off the 10-minute chart, I'm flipping down to my 5-minute chart. That if this is the 10-minute, correlating with the 10-minute chart, the 5-minute chart says I'm starting to trade up. I use the 5-minute and the 10-minute combination. So if I can see this, I know that my bias during the day is to be trading to the upside. Okay, what else? Crude oil. Crude oil, just nothing right now. Trading, it's been in this range now for 2 months, which might be the yeah. So this is how you should do your analysis. Is there a trend? Is there a pattern? Is there a breakout? And look at crude oil. Don't want to trade it. It's just moving sideways. Yeah. So if you want to trade the Qs during the day, like today, then you go back and you might be trading it off the 10-minute chart until it's time to take profits. Maybe getting ready to buy it again on a J-hook pattern, but it didn't confirm. Crude is getting squeezed. I don't know how it would be getting squeezed. Oh, as far as price movement, yeah, but I don't know whether it's getting squeezed or it's being supported in that area because, between the two moving averages, whoops. Yeah, so it's not really going anywhere until it breaks out one way or the other. And it may not break out one way or the other. right now there's more crude oil being found, especially in the United States, with the Balkan field up there in North Dakota, with that new big field in Texas. And they're finding some big, huge fields up on the north shore of Alaska. All right, so let's start taking a look at some patterns that are working very well. And the reason I'm showing these different patterns is you don't need to learn all the different signals and patterns, meaning you don't need to, I should rephrase that. You should learn all the signals and patterns and be familiar with them. But what you want to do is find 4 or 5 that you really can identify and understand, and use those to become an expert. One of them is what I call the support. You know that every time we go through a resistance, there's your little fry pan bottom doji sandwich breakout. So if I'm looking at this type of pattern, I can add 2 plus 2 together, and it's one of the guys in the training session today said, oh, I thought there was 2 different things to make 2 different everything. No, it's just kind of 2 plus 2. We can add up a bunch of stuff telling us which way something's going. So we can see the fry pan bottom type slow curve pattern followed by a breakout with a doji sandwich. That just gives us that much more confidence that that is now a big breakout. Or the old adage of the moving averages act like magnets, that when they were selling this off, didn't really pay attention unless you were short until it got right to a level that everybody else is watching. Now, the advantage we have is that we can see exactly what their decisions are at, and they be in the market at those levels. So if I see that little Morningstar signal, I know that's probably a good time to be buying because that's where everybody decided to buy. We did that based upon our recommendation last week or 2 weeks ago with graph, your cradle type pattern, right smack dab on the 50, confirmation of the cradle pattern up through the T-line as well as the 34. All we have to do now is just stay long as it stays above the T-line. The gap ups are what tell you that there's very strong investor sentiment coming back into a trade. We recommended QGN, I forget which day, but it was based upon there was a kicker signal. It used the T-line as support. They started gapping it up. They've gapped it up again. There's your strong signal. And a lot of people ask, well, why do you use the 34? Because the 34 sometimes works relatively effectively to the point where it's worthwhile having it on your chart. But the gap up, that tells you people were trying to get back into this trade with great enthusiasm. Tesla, the gap up, it's now broken out. So these gap ups told you exactly what was going on in investor sentiment. They wanted to get into this trade with great enthusiasm, and that's exactly where we want to be if we see a candlestick reversal signal and a gap up. Tesla is a buy right away. Well, probably more, what do I want to say, guarded or more scrutinized, that you could still be buying this one on the basis that we've got wave 1, wave 2, wave 3 probably taking you up above 2,000 anyways. And it does, yes, have that little scoop pattern makeup. Shill, there's your ultimate cradle pattern. Big down day and just flat as a pancake. Doji, doji, doji. Remember, if one doji means indecision, a series of dojis means greater indecision. And you see that type of series of dojis, and they break out, and look how they've broken out. Big candle breakout. There's your footboard. There's your doji sandwich. And what do we expect from a doji sandwich? More upside. So what's just a logical analysis based upon historic results? Got a cradle pattern, got a doji sandwich. It should be much more upside. Best Friend McMuffin need to be added to second edition. Oh, no, I'm afraid there's probably not a second edition. But that's where you're starting to get the benefits of, or not starting, but you get the benefits of that information in here, because the information that was accumulated as far as myself, how many years ago when I wrote that book? 15 years ago now? 10 years ago, somewhere around then, was based upon high probability setups, and now we can keep accumulating the results of that information to give us even better high probability setups. CRNC, your J-hook pattern, your double doji, you still stay long on this one. Here's just something to find, even if you're a swing trader, but more oriented toward a day trade. If you see a double doji, consolidation, consolidation, but not really convincing consolidation, and then a positive open and trade positive, that candle right there and that candle right there will usually be the same. So whether you're trading options or buying the stock, you've at least got a day trade, if not a good swing trade setup. Plug, J-hook pattern, doji, gap up. The fact that they gapped this down after the sell signal, but held right here on the T-line, that should have been very relevant information for us. I mean, it could have traded anywhere, closed anywhere, but it closed right on the T-line, right on the level that nobody has on their charts. That gave us the added information to say, get ready for a J-hook pattern on a positive open. Now what are we looking for? We're looking for it to break out through this level, giving us another wave to the upside. What have I tried to do? Okay. Apps. Ever since your slow curve breakout, not only is this above the T-line, it's staying above the 3T line. Run, we're looking for this to break out through this level, which would put us back up into kind of this trajectory, heading for the $55 area. Whose handwriting is that? That's just a fine howdy-do. That must be Graf. Huh. Can't even read my own handwriting. So here's your pattern setup. The classic, fry pan bottom, strong price move, J-hook pattern, and look where it went today. Broke out through any of this. What's our expectation after breaking out? Wave 1, wave 3 in progress. What am I doing here? I'm just kind of goofing around. 10. There's that slow curve with a doji sandwich breakout. All you can do here is stay long. Rollins, ever since that little breakout right here, coming out of this fry pan bottom, all you can do is stay long. Now it's starting to get a little bit toppy up here. You can see not quite a Morningstar signal. You can see it's a little bit dicey. Now you've got another doji. You're in the overbought area. You definitely have your stop below the T-line. And PNR, looking for this to break out big to the upside. Again, kind of a just slow curve build up. So all you can do with this one right now is stay long. And notice what started this uptrend. There's your bobble breakout. There's your message. The message is somebody was very anxious to get back in, but there was profit taking. Now the profit taking's over. Now even with the profit taking over and coming back up, it gave us a bobble breakout, additional confirmation we should be buying that position. Oh, that wasn't that. RRC, there's our little best friend breakout. There's our J-hook pattern. Just keeps you in this trade. That little breakout pattern is very indicative of new strength coming into the trend. Whoops, right here. Notice our best friend breakout. That was on Dix. That gave us a quick trade. And there was another one. I don't know whether it ever, yep, Freeport. Freeport, if you like this one, you could still be buying this one on positive trading because of this breakout, telling you this uptrend is still in progress. Domo, kind of your best friend, Morningstar type signal, double doji. So whenever you see this setup, the conclusion is if it opens positive, you want to be buying immediately. Another trade like this. If it opens lower, shows you they're probably coming back to the T-line. So you got a very good indication of whether to stay in these positions or get out and move on to something better. The fry pan bottom breakout of Maxar. But it was a bearish Harame shooting star. This has to open positive to stay in it. If it opens lower, it's coming back to at least the T-line. So a lot of people ask, well, what do you use the 3T line for? 3T line is used when you start moving a little bit away from the T-line and start seeing sell signals. You can use it to show that if they start trading back below the 3T line, they're probably coming back to the T-line. So it gives you a little bit faster indication of when to take profits. And EB, another fry pan bottom breakout, but a little bit dicey in here. Very simple. It needs to open positive and trade positive to stay in it, or if it starts trading lower, close it out because it's probably coming back to test the 50 to see if it's now going to act as support. So your biggies like Nikola, same scenario. Evening star type signal. It has to open positive and trade positive to tell you this uptrend is still in progress. If it trades lower, you're kind of losing that upward trajectory. Apple, slow uptrend. Netflix is kind of the weak sister right now, just going sideways. But Overstock is just stronger than bear's breath with this J-hook pattern setup. So you can see the steady eddy. Now the consolidation and what started this J-hook pattern. There's your little trend kicker kind of confirming the bulls have come back into on the J-hook pattern. Netflix, not really. Netflix is just not going anywhere. Amazon is in a wedge, yes. So you don't pay attention to this one until they can break out through this even on that basis. Oh, pshaw. So wouldn't pay attention to this. And this is probably even a little bit. More up like that. And Tesla, we did. Tesla, when they start gapping it up, that's just a good visual indication that there's a lot of force coming back into that trend. All right, so we've got some good setups. Fry pan bottoms. I think Jenny may have pointed this one out earlier today. But look at your fry pan bottom. Look at the normal trading activity. They came up through the 50. They came right back to the 50 and acted as support with a Morningstar signal, followed today by a doji with the additional confirmation that today's doji pretty much came right back to the T-line and acted as support. If this opens positive tomorrow, 2 plus 2, you've got a McMuffin bouncing off of 50 after showing that it was supporting there and producing additional confirmation that you could be in a fry pan bottom breakout situation. Whoops. TGCA, fry pan bottom. Now they've come up, same scenario. They gapped up, they pulled back, used the T-line as a support. If this one opens positive, it's got a lot of running room. If it breaks out through here, obviously it's going to the 50. If it goes through the 50, it's coming back up into this area eventually. The housing stocks, I'll get off track here a little bit because this is a nice fry pan bottom setup on TMHC. You've got Beazer Home. So the housing stocks are all kind of breaking out. That's Beazer Home. This is, that's not anything. Pulte. Get the wrong letter. Pulte. Fry pan bottom, wave 1, wave 2, doji gap up wave 3. And Toll Brothers. So right now, if you can see that all the housing stocks are doing good patterns, if you've got 10 positions on, probably want to have at least two in the housing area. And PE, another fry pan bottom. And what do you got going on here? If it opens positive, you've got a bobble breakout, which is part of that J-hook pattern, more defined. If it opens positive and breaking out as a bobble breakout, what's that tell you about your fry pan bottom? It's probably breaking out. Allo, probably in an uptrend. It still has to break through this level, but there's a good possibility it will break through that level because of the strength of the signal, your McMuffin. Morningstar signal followed by a doji sandwich. More than likely, it's got a lot more upside. Your J-hook patterns, CBAY. Started with a kicker signal. Sold off with a kicker signal. Doji, little hammer type signal, or even a little bullish engulfing. Doji sandwich. This one could be a high flyer. And if this was wave 1, wave 3 could take you pretty quick up into this area. Here is a good one again. ALT. Left-right combo, long-legged dojis, right on the support level of the 34. Additionally, the support level of here. Doji sandwich, kind of a mini scoop, double bottom. This one, you definitely want to be buying on positive trading tomorrow. SYRS. Another J-hook pattern. Now, why is this relevant? If this is wave 1, wave 2, starting wave 3, if wave 3 is the same magnitude as wave 1, What's it tell you about this resistance level? That resistance level is not acting as a resistance. Get ready for this breakout move. And CYCN, there's your J-hook pattern with additional confirmation that it came up through the 50, came back to the 50. And what happens when everybody sees that it's supporting at the 50? They're all happy. They all start jumping back in. And that's additional confirmation that wave 3 is probably now in progress. PSTI, kicker signal off the support level through the T-line. At least kind of figure it could come back up into this range somewhere. And remember, or not remember, look what happened over here, that little slow curve situation. What were the other slow curves? Oh, SRNE, slow curve, breakout. Look at Kendai, slow curve. Another one that could have the same magnitude of coming back up to this target up here. LVGO, another little slow curve. That's probably at least bring you back up into this area. Your best friend signals. Somebody was watching this the other week with the best friend breakout, anticipating a 45-degree or better. They're getting the better. Nugget was one of the gold stocks, but also had a best friend, doji gap up. Expect more upside, maybe back up into the trend channel. KMDA. You can see how they gapped it up, did kind of a message. That means there's still a lot more strength. Again, that gap up, as we saw in Tesla, is very relevant. We did overstock. People that are trading in the builders, there's Nail with a T-line crunch right up through the 200. You stay long. And RMBL, there's that little scoop type J-hook pattern. Get ready for another slingshot effect to the upside. GM, as boring as it mostly is, that's a bobble breakout. Expect some more upside. SNO. What is that? Oops, that's just not coming up. I don't know why that one wouldn't come up anyways. VXRT, you start watching this one. Notice how it's basing, a lot of indecision. Now kind of a little morning star signal. Let's get rid of this because that's nothing. Look for some good upside. At least what we're identifying is the ones where the probabilities are in our favor that we're in the right direction. Look at ARCT, kind of a best friend gap up off the 50. Came up, pulled right back, and then started buying very strong. That's a good strong chart. No, it was SNDA, and there's some, Joel, hold on to your individual ones until I tell Jim to do the double line. And remember, so that we're not just doing a smorgasbord, if you've got something that you have questions on, put the symbol in and ask what the question is pertaining to that symbol. And there's a Morningstar or a cradle type pattern bouncing right off the 50 and also off this support level. Maybe that was it. SNDR. What did I have that under? Oh, kind of showing the bounce off the 50. Now we're right at the breakout level. Lumber liquidators. There's your kind of J-hook pattern breakout. Square. Stay long. You can see how it's supported on the T-line. Down here. Fungu. Notice how you had kind of a wedge and you had the double doji breakout. Oh, that's the FANG index. That's telling you is that the oils? Still heading up further. LVO, Beezer we did. AUY, which gold stock would you want to buy? There's one that did a kicker signal gap up. Probably coming back up to the top. And one more, Tigger. J-hook pattern setting up. A question on entry, which is still confusing for me. What should be done when the price hits the entry level that you mentioned in your daily picks, but then after a while starts trading lower? I do not mean buy it immediately, like after an hour of the market opening. It hits the price level for entry, and then it goes against. Nothing you can do about that. Remember, anytime we're looking for an entry level, let's say we decided we were going to buy if this, would it close at 7? If it came up through 712, just picking out a number. That would tell us that we have probabilities that this broke out. So the one statistic that you always want to keep in mind is 70% of your trades are likely to work. Now that's a pretty high percentage for any trading technique. But you always have to remember the other side of that statistic. 30% of your trades aren't going to work. So if I bought this bought this tomorrow, right here, and it traded up, and then at the end of the day closed down here, I close it out. I just tell myself it wasn't that I did a stupid analysis. It was that was one of those trades that didn't work. Close it and move on to something that looks more favorable. So the prospect of a trade coming up through a level that tells you it's time to buy is that the probabilities are it's telling you the pattern is working. Now that probability is also associated with how is the market opening. If the stock opens positive, but the pre-market futures is showing that the Dow is going to open down 140 points and the NASDAQ down 35 points, even though it opened positive, I'm not going to be buying until I see whether there's still a lot of strength in spite of the market selling off, or whether it just hovers here and starts trading lower because the market's trading low. Yes, there are going to be trades that you see me right at the end of the day in the afternoon comments saying XYZ did not execute. But if it comes back up through today's open and tomorrow's trading, you want to be buying. Because the pattern didn't dissipate just because it didn't open correctly that one day. More than likely, the signal or the pattern that told you if something was happening is going to happen. It may just not be on the day the exact day we recommend it. Now, that is the reason why, Raymond, you're home already. All right. That is the reason why we teach people how to scan. So that if the 3 that I happen to narrow down as being the best trades, it may have come from a list of 40. And then I narrowed that list down to 20, then down to 10, and then down to 5, and out of that 5 I picked 3 that I thought were the absolute best. Now, the absolute best is a analysis of maybe it's the best friend signal, or maybe it's one of the top ranked signals and patterns that are going to produce the best probabilities. But the three that I pick, let's say they don't open correctly. What did we recommend today? BRNA. Well, BRNA opened and immediately started trading off. What's that tell us about the strength of that after they opened it? It's not there yet. So where's my entry point? If it came down here and then turned around and came back up through the open, that's when I'm buying. Why would I be buying then and not on the open? Because right now I can see the profit taking's over and the buying has started again, which is what I expected because of that recommendation. I think AUDC was kind of that same situation if we make this bigger. It opened, started trading down, didn't affect, hit the support level, this time the 34. Now, when it came back up through the open, which direction is it going? It's going in the direction that we expected to be going, so we're buying when it comes back up through that price. Daniel, it's very simple. We'll do the training sessions again on how to scan, but it's very simple. Everything's already built in. You can ask as many questions as you want, Jenny. This is not like little Johnny's Boy Scout trip, remember. Yes, 4 scenarios of entry. If the market opens higher and the stock opens higher, yeah, you pretty much want to be buying. So those are the 4 entries. So what do you mean by the market? Meaning the Dow and the NASDAQ, if we're going to be buying something because we think the market trend is moving up, and like this morning, I don't even know what happened this morning, but, the Dow opened up positive, but immediately started selling off, but the NASDAQ continued to move higher. That scenario tells me there's no major change of investor sentiment. It's just specific sectors are being bought, other sectors are being sold. Yes, that's the 4 quadrants. It is both. So I often get asked the question, why don't you use the S&P 500? Because isn't that more stocks? Or the New York Stock Exchange? That's more than just 30 Dow stocks. The answer to that is we can analyze the Dow, the NASDAQ, the S&P 500, and the Transportation Index visually probably in less than 15 seconds total. So if I see one index like today where it opened and started trading lower, and see another index opening positive and continuing to trade positive, and another index pretty much trading slightly higher but not moving anywhere. I mean, I can go through and analyze these indexes in that length of time. Probably quicker since I had to type them in. No, don't need to wait 30 or 60 minutes after the open. Everybody says, well, the old adage is that the amateurs buy in the first hour, the pros after that. If we're buying stock, we don't care whether it's somebody's grandmother buying or some professional hedge fund. We're buying because somebody is buying. We don't care who the buyers are. And that's what these patterns and signals tell us about human nature. They're just an illustration of whether people are buying or selling. We may not know who's buying or selling, and we don't care who's buying or selling. So those 4 quadrants, I'll do an entry strategy again here pretty soon. But those 4 quadrants are relevant. That we don't want to be buying if all the indexes are trading off hard. Tells you there's no buying going on that day. And we want to be buying immediately if all 4 indexes are being bought on that day. Okay. For some reason, I'm sitting here with my hands ready to type. I was supposed to type something, and I can't remember what it was. Did I miss something? No, apparently not. Okay, any more general questions on candlesticks? Remember, everything that we do, or everything I do based upon what I've learned about candlesticks, is it's merely common sense put into a graphic depiction. If you bought calls on VXRT, when did you buy these calls? The other day here? What you have to evaluate is, I'm anticipating you bought the 10s, which aren't worth a whole lot unless they pop over the next 3 days. What I would be doing is, if there's any strength in this, maybe I start selling half of this position and buying some out in, depending on whether they have weeklies. Okay, so if they're not working great and you expect this to pop, but you're getting caught on time, remember, we're trying to make our positions as non-pressured as possible. And if part of the pressure is that something's going to expire in 3 or 4 days, and we're starting to have a little bit of doubt about that position, close out the position. I would much rather take a small loss or a flat and not sit here and think, oh boy, if I sold now, maybe it's going to pop. I'd rather have that money back in my pocket to find something where I see it's a much stronger probability. Can you explain a slow curve? A slow curve is kind of a derivative of a fry pan bottom, except it's much shorter in duration. Trying to think of one. And it's usually already in an uptrend. This is a fry pan bottom, big rounding bottom at the bottom. This is a slow curve. You can see that it's in the trend. Now it's just consolidating, and the slow curve has an expected result. It's usually very powerful to the upside. If we want to be buying when it comes back through the opening after a sell-off, wouldn't that be like a hammer type signal, which is not good? No, that's exactly right. You don't want to be buying on something that comes back through. If I was buying on this day because it was trading positive, it was giving me a bullish candle. So if I bought here and it was trading up here and started backing off, I'd have my sell stop right here. Because as soon as it goes through the open, who's winning between the bulls and the bears? The bears are winning, and I don't want to be in a trade where the bears are winning. And so that's part of your exit strategy, or should be part of your exit strategy. If you're buying and it comes back down through the open and starts producing a red candle, that means the bears have taken back control, close out the position. If you can set in your mind that 1/3 of your trades are not going to work, that gets rid of the emotional stigma that you did something wrong or that you're stupid or that you can't analyze correctly. If you just realize that 1/3 of your trades aren't going to work, that makes it much easier for me to say, this one's not working, close it out. Because what I'm more interested in is taking that money and going and finding a trade like this so that I have my money in the proper direction of another trade. So, Gary, I haven't seen, I think there's been a few, meaning maybe 2 or 3 mornings over the last year where they were having a little bit of a problem, but after 30 minutes they had it resolved. Today, yeah, that was pretty much all day long they were having problems. So, yeah, and that's the playing field. It's not just with Thinkorswim, Fidelity, Schwab, all the other ones have a day where there's a bug in their system. Okay. Any more general questions on candlesticks? Jenny, hold on until I tell Jim to do the double line. Except you are explaining what you did, so I would do that. You mean it wasn't just, no, Pat, it was mine. What was the question here? Can you check EAT? I closed out the position after a gap up. Very good. Then it started to sell off. Let's put it this way, Jenny. Would this be the best place to have your money? Or is it like everybody's attachment that, boy, I'd hate to sell out here, and it turns around and heads back up. Oh, I sold too early. If you bought here or here and you're in the overbought condition, you're starting to see a little bit of diciness, ask yourself, is this the best place to buy? Or is there a chart out there someplace that looks more like this? So just remember, you're not trying to maximize your profit on each trade. You're trying to maximize your profit for your account. And that means taking profits when it looks like it's time to take profits, because there's 9,500 trading entities out there. You can take that money and find a better place for it. Okay, so with that, Jim, let's go ahead and do the double line. Remember, you're supposed to be asking questions about what you're looking for in those signals and patterns, because that way it reduces our time of trying to explain what if you were going long or short. Guild, you can get ready to buy this one. I'd want to see bullish confirmation above the T line. Jag, that's not coming up for some reason. There's a nice J hook with there's your McMuffin. I'd be a buyer of this one just because of the McMuffin and the fact that the McMuffin is implying there's going to be more upside, which means we got a J hook pattern in progress. Gold. Whoops. You can get ready to buy this one. Or buy gold. The Qs. You just stay long as they, I wouldn't necessarily be buying the Qs as a trade. It's probably got more upside, but it's not necessarily something I'd buy up here. It's given us the analysis that there's probably going to be more upside. Little kicker type signal off the 34. You can buy this one on positive trading. AN, we're looking for this to break out further giving us wave 1, wave 2, wave 3 of a classic pattern. Roku, stay short. Boeing, probably wouldn't be long or short. You can see the direction that Boeing's going. Pretty much nowhere. Clovis had a nice big gap up. That'd be a toughie. I'd be buying it on strength, but you want to see it break out through this resistance level right here. Flowers, nothing wildly exciting. You had that little scoop type pattern. Now you've got the indecisive doji pullback. So if you're buying it on the basis that it's probably coming back up to the top of the trend channel. Potential breakout. Yeah, but not a big breakout. I would think it's just staying in this trend channel. Far-fetch, J-hook type pattern. Expect at least a 45 degree. It was running along the same lines as Overstock with that J-hook pattern. Oh, I didn't answer the question, did I? Would I be buying on positive trading? Yes, but I'd be expecting this trajectory. QDEL. QDEL, nothing yet. I wouldn't be short, but I wouldn't be long. And FSLI. Nothing here either. Would not be long or short. Goldman, I'd probably be short, but you're still in a wedge. So at this point, it's probably doesn't have any great movement one way or the other. American Express, after your left-right combo, after gapping up, if you're short, you can stay short. But I'd also look for this as my first target. JP Morgan, all about the T-line. Should I dump them? I would. I wouldn't be long. Lou, you saw the sell signals. And today you had a bearish kicker signal, JP Morgan. You should have definitely been out of that one. Let me go back. I didn't read far enough. I would have been out of this one. And Goldman, I would have been out of that one. Yes. NIO, it might be coming back up, but I probably wouldn't be long or short this one. There's just not enough strength one way or the other. DLR, that's kind of a cradle pattern. You can be buying this one because of the inverted hammer type signal, a little teeny wedge / cradle pattern. You can buy this one on strength. And is this Heinz? You can buy this one. You're just not going to make a whole heck of a lot of money with it. Well, sure, PFT. You always crash a party. Oh, where's this guy? Get this stuff. Yep, that was not good. Why? If you're breaking out and you see a huge price move, I'd at least put my stop here. It should be going in that direction. I wasn't paying attention and did not close. Would you have set a stop in anticipation? Now I am still long. What are suggestions? If this needs to open positive and trade positive. If it opens lower, coming back to the T-line, it's pretty much taking the wind out of the sails. I'd probably find better places for my money. There you go. It needs to open positive. Inverted hammer, gap up. It's not a kicker signal, but it is an inverted hammer bullish confirmation. Still would not be afraid to be buying this one on positive trading. Oh boy, it's been so long that I've looked at oats. Z-O-A-U. Nope. Z-O-A-V. Nope. F.O. Oats. Oats did a little trend kicker gap up. You could probably be buying this one. Place to enter. I'd just be buying on positive trading. And then use the T-line as my stop. Zoom. Another one that's coming back up. You've consolidated. You can see where the resistance level is. I'd be buying above that level. We did JP Morgan. I'd be out of this one. I don't think I'd go short because there's too much junk right in here, but I definitely would not be long this one right now. Play. Another one that when it broke out, it's coming back to test the 50 to see if it's now going to act as support. So you watch to see what it does here. I wouldn't want to see it close below the 50. That's taking all the wind out of that sails. Where's the right place to close the trade? Right below the 50-day moving average. It shouldn't come back down through there. Labu started, looks like a little cradle pattern. You can buy this one on strength. Ruckus. There's your bobble breakout setup. You can get ready to buy this one on positive trading. Notice when it failed, where it supported, right smack dab back on the T-line. I'd be a buyer of this one on positive trading. And SRNE, if you're, I was going to say if you're short, it bounced off the 34. I probably wouldn't, right now that's not a chart to trade. I wouldn't be long or short. IGC, boy. Neither of them are really fantastic, but IGC is the better of the two. What do I keep hitting here? Another one that when it broke out and it closed back below the T-line, you closed it out. Right now, I would not be long or short this one. PEIX. Notice the pullback. Indecisive, indecisive, but never close below the T-line. You stay long on this one. Potbelly. Well, for crying out loud. All you can do here is stay long. Is this wave 3? No. Yes. It's more of your bobble breakout. So all you can really have to do on this one is just stay long as it stays up above the T-line. CAU. Well. F.C. Corn. Z. All right. CZAZ. Corn. No, is that? All right, so there's corn. Looks pretty strong. Watching what wheat is doing tonight. Down a little bit. And soybeans. Down a little bit. Okay. Merger hasn't happened yet still, right? Okay. Okay. All right, so there's a couple that I have stars next to. Kindai. That slope curve potential breakout. Aloe is a McMuffin. And alt, ALT, double bottom, doji sandwich, kind of breaking this downtrend. That one's got upside potential. All right, everybody. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.